Well, to take us through how investors are reacting to all the news, Gemma Dale from nabtrade joins us now live. Gemma, thanks so much for joining us. Look, another bumper night in the US. Maybe let's start with international this time. Of course, it's coming to the end of this US earnings season. There's been some great results. What have traders been focusing in on?
There's not a huge change in the big names. We don't see this dramatic shift in and out. If we see something fabulous out of Apple, everyone doesn't suddenly buy Apple or sell Apple. They're not quite as price sensitive as they are in Australia, where they're very, very price sensitive when it comes to the big names in the US. And mostly what we're seeing at the moment is either the big names continue to get support. Tesla is always in there in the top 5. People love it. They just keep buying it. And the EV story just keeps running along with NIO and a couple of the others running behind it. What is quite interesting though is sort of seeing some things shift in and out. And if they're shifting in, it's often stuff that is either super exciting and popular or it's been absolutely beaten to death. One of the ones that's come in quite recently is Plug Power. I've been watching it move up for a little while. It sort of comes in, not huge numbers of trades, but it has been coming in consistently. It's down over 50%. It's a hydrogen cell manufacturer. It's an interesting one in that they are riding the whole Biden green wave story. They're not even at 50% green hydrogen yet. That is an ambition for 2024. So at the moment, it's not a particularly green story, but it will become a greener story over time. Obviously, people are fairly keen on that. But as I said, it's down 50%. So people are obviously seeing a bit of opportunity there. Palantir's back in. It's been in for a little while and out again. Listed late last year. It's quite an interesting company. It's got some interesting reputational issues to consider. Big data, very secretive. 3 major clients, including the CIA. So an interesting one for people to look at. It's a bit keen. The one that is quite surprising to see is that Tencent and Alibaba have been sold off. And given some of the political tensions around Jack Ma and so on, that's not very surprising. But it is surprising to see it now. It's a little bit later than when some of those stories were breaking.
All right. Okay, well, let's come back home then, take a look at what's going on. And of course, the banks are reporting this week, at least a couple of them. Which no surprises too as to where they're going at the moment, given the current economic environment. So how have investors been reacting?
So banks still make up a really meaningful proportion of the average portfolio. They are still really, really widely held and held with relatively high conviction from investors. They've always been in there. You know, most people when they started buying stocks in the 90s or early 2000s would have bought a bank. It was one of those things that you just did. Everyone understood them. They made a lot of sense if you were just starting to get trading. They're still in there for most portfolios, even though they have been falling in value quite a bit with the exception of CBA. So NAB's shares are still well below where they were pre-GFC. I'm not even talking pre-COVID, pre-GFC. You know, there've been a couple of massive dilutions obviously during that period, which would change the overall valuation. But some investors are underwater from stuff they bought 15 years ago.
What about dividends? Are they attracted by that?
That's the thing, right? It's all about the yield, and it's
Right.
been so meaningful. A lot of our investors treat them like a really, really great term deposit, and that was when term deposits were at 5%. Now they're 0.5%. So you'd vastly prefer to hold a bank share and not worry too much about the capital fluctuation. That's not a concern for you. You're taking the share dividend and you're taking the imputation credits. So for a lot of our investors, that's what they're there for. What's really interesting is how much they move around when the prices move. So we've seen dramatic shifts this week. Volumes are way back up again compared to the last couple of weeks, and it's the banks that are driving it. So ANZ and NAB got sold off. They were both over a 90% buy. ANZ was a 96% buy, which is incredibly high conviction for our guys. CBA bounced 2.5% and was over an 80% sell. So they're really moving on this, but it's worth noting. So it wasn't the same group buying ANZ and selling CBA, so that wasn't a rotation between the banks. There were 8 accounts in common. So completely different groups of people. And they are clearly, though, usually doing this at the margin. It's not a wholesale shift where they sell down their entire CBA portfolio and just buy ANZ. They'll just shift at the margin when they see the prices moving.
And what about the buy now, pay later space? Has it fallen out of favour? We saw those Afterpay shares down almost 5% on the day.
Look, we don't see the volumes we used to see in it. I mean, it was so popular last year and for the years leading up to it. So when they were just running super hard, everyone was all over it. And then when they got beaten up really badly during COVID, everyone was all over it. So the average buy price for Afterpay last year was around $40. So huge buying in the dip there. under $100 though. People
Yeah,
were
I
pretty
think
keen
it's
on it.
mid-90s now.
Yeah, so yesterday people were keen, and I'd imagine they'll be keen again today. Not the same numbers that they were last year. Obviously, heaps of people hold it already. And we did see quite a bit of profit taking up around the 120. I think a lot of people saw it up to 160, came back down to 100. When it bumped to 120, they were like, oh, I might not get another opportunity to lock this in. So they'll be feeling pretty proud of themselves and then buying it back in under $100.
Gemma, thanks so much for joining us this afternoon from NAB.
Great to see you guys.
Thanks, Gemma.